morning, everybody.
Good morning.
How are we all doing?
Good.
Today it's my honor to be the moderator for today's panel. We have three very intelligent gentlemen, and I'm going to allow them to take a moment and introduce themselves. James Chen.
Good morning, everybody. Thank you, Richard. My name is James Chen. I'm your good neighbor State Farm agent in the city of El Monte. I grew up out here in San Gabriel Valley, went to Marquepo High School in Alhambra, attended USC, graduated in 2001, and then also current resident of San Gabriel.
I like that, Trojans. Sam.
Good morning, Sam Ming from Farmers Insurance. My office is in Alhambra, and I actually spent almost the last 35 years in Alhambra here. I met my wife in my church, and then we raised up a family here, 4 kids, 3 boys and a girl. My youngest one is 16 years old. So raising up the 3 boys is really like a burden sometimes, financially and also physically. Okay, anyway, but they are grown up already anyway. So I have been an agent for 27 years, and other than working as a farmer's agent, I help out the Boy Scout. I am an assistant scoutmaster in my church, and I help out the Troop 349. Thank you.
Thank you, Sam. Last but not least, Mark Wu.
They always, the oldest are always going last here. But anyways, Mark Wu with Allstate Insurance. I actually grew up in Bakersfield, but moved here for college, lived in Delta Avenue, which is about 3 blocks down the street. After attending Cal Poly Pomona, I went to Bank of America for 3 years and then decided to start my own business. So I'm going this next month on my 33rd year in business here as an agency owner. I got married 31 years ago. We just celebrated our 31st anniversary this past month, and so stability is a part of my life. We have 3 wonderful daughters, Kiara, Kayla, and Cassidy. They are the joy of my life. They keep me working because they enjoy things in life. But they're really good girls. And so my agency staff, I'm proud to say, are all licensed. We speak 5 languages out of my office because I grew up in a place where you only needed to speak 1, but now my business is in an area that you need to speak many, and so we are able to afford that out of my office. Thank you.
Thank you, Mark. Okay, on today's questions, we're going to start off with James. James, what does liability coverage cover in a homeowner policy?
Okay. Liability coverage in a homeowner's policy covers injury or damages to others that can be contributed to the homeowner, such as most commonly you may hear like slip and fall. If you don't maintain your home, someone gets hurt on the premises, they can sue you. In addition to just being at your place of home, it also extends outside of the home. For example, if you're going bowling and you drop a bowling ball on someone's foot, your homeowner's policy can cover for liability that arises at the home, outside of home. So people with pets, dogs run out, bite somebody, those are all things that are covered by your homeowner's liability coverage.
Very interesting. Thank you, Mark. James. Sam, since the last 6.7 magnitude Northridge earthquake in 1994, we haven't had any severe earthquakes in the last 26 years. Do I still need to purchase earthquake insurance for my house?
More now than ever.
Okay, this question actually has been asked by my clients almost every day, and I'm just curious actually to do a survey here. How many of us here we actually have a earthquake policy? So the rest of you either don't have an earthquake policy or don't have a house or
I can sell you a house.
well, I guess this here is pretty personal, but depends on how much risk, pretty personal, how much risk you can take. Now, if I own a house and my house reconstruction cost is $300,000, so if there's an earthquake strike here, you pretty much lose the whole thing. Like on a like the one in Northridge last time. So my advice is actually, you can only pay maybe about either 10% of your $300,000 of your home reconstruction cost, or maybe 15%. Then you can actually insure your home, and because that's a biggest asset. We're talking about asset protection, how to protect yourself in case there is a catastrophe loss. So anybody has any question on this here?
We'll take questions at the end.
Okay, all right.
Mark, what perils are normally covered under home insurance and what perils are not?
So perils are things that can happen and impact and damage your house. So you need to read your policies and know what are covered and what are not. But in general, if you're getting one of the preferred policies in our industry, things like fire, wind, hail, smoke, falling objects, explosion, those are covered. And then water damage is covered only when it's a broken pipe or a bursted pipe. Because remember, the way insurance works, it's a sudden and accidental event. So it's not something that's happened over a course of period of time. So leaks are not gonna be something that are covered, all right? On the flip side, what are not normally covered, well, Sam mentioned earthquake. So earthquake is a sudden and accidental event, but that's excluded in California. And so is flood, so surface water, when it hits the ground and comes back into the house, that is not also a covered peril. Also, when you have vermin damage, such as rats biting through the wiring and whatnot, or you have termite damage, that's something that's a maintenance issue. So that kind of thing will be excluded. And then if you guys remember, about 4 or 5 years ago in Anaheim Hills, there was a landslide where houses came down off the hill and all that. So landslides are not as well. So those are the perils that are not covered, and then I just told you the perils that are. So know your policies.
Thank you, Mark. James, how is a condo unit policy different from a homeowner policy?
Okay, condo unit policy, also known as what's walls in coverage, will cover the things within the wall. Keep in mind, a condo unit owner generally pays an HOA fee. The HOA, which is like the master policy, covers the whole association, all the homes, the exterior, the maintenance, the general upkeeping. So the condo unit owner will just be responsible for the inside, like the cabinet walls, the flooring, the special configurations they have within the walls. So generally, it's gonna be less coverage, but only what they need. So they don't need to spend the full homeowner's policy because the HOA covers that.
Thank you, James. Sam, is earthquake coverage already included in my homeowner's policy?
Well, actually, Mark actually answered this question for me already earlier. Earthquake policy, flood insurance policy, all those are extra, so you actually have to buy those separate. So depends on, say for flood insurance, depends on whether your lender require that once they do a flood certificate in your area. If your house is located in the lowland, then of course they will require you to buy it. But sometimes if you are by the hillside, mudslide and all those, it's not required, but you might have to consider that, because if there's heavy rainfall and mudslide, then you may need a flood insurance policy for your home.
Thank you, Sam. Mark, what is extended dwelling limits and why should I be concerned about it?
Okay, for how many of you guys own homes? Raise your hand so that I can see. All right, some of you own 2 or 3, 4 homes. You got 5 hands raised. So that's great. But it's super, super, super important for you guys to know this little endorsement in your policy, because I'm not sure if you are aware of that, but the onus of figuring out whether you have sufficient coverage is really on you, not on us insurance agents. We can make suggestions, but you are ultimately the one that's going to be signing and saying, hey, that's enough coverage for me. And so when I forgot the city up north, was it Pleasantville that burned down? What was the name of that city? Paradise. You know, the whole city burned down. Many of them, a majority of those did not realize that they had insufficient amount to rebuild their home. So you don't want to be caught in that situation. So here's what happens. you get a policy from any agent or any company out there, and they'll give you what they call a dwelling limit. That dwelling limit is what will give you money to pay for things like fire, wind, hail, smoke that destroys your house, all right? And so companies are either a specified limit policy, meaning that if you have 500,000, that's all that they give you, and that's where the policy stops. So it won't give you a penny above that. Then extended limits are what the companies are willing to pay above that dollar amount that you see on your policy. So some companies out there will pay 20%, some companies out there will pay 25%, and some companies pay 50% above that. So using that same $500,000 example, all right, 20% above that is 600,000. So that company would pay all the way up to 600,000, even if they show 500,000 on their policy. All right, the company that shows 50% pays all the way up to 750,000. Well, why does this matter? Well, what if your house, it costs 700,000 to rebuild, and you only had 500,000 in there? You're going to be capped out, and unfortunately, if your company doesn't pay the limit to rebuild, then that money comes out of your pocket. So you really need to know what that amount is from your agent.
Great, thank you. James, how can one maintain a good claim record on their homes?
Okay, well, general upkeeping, debris and trash, keep it away from the home, trees near the home, cut those branches off. And also, like Mark said, there's kind of like some things that are covered, some things that are not covered, so it's important to know which ones are. In the case where you need to file a claim, very importantly, always, if you can't, always ask to file it as an inquiry claim. Find out if it's covered first, get all the details first. Because if you file a claim and an adjuster comes out and they find out it's either one or not of the things that are covered, without even writing a check, there's a claim record on your home. And that stays on your record for about 5 years. So always want to make sure you call as an inquiry claim, get all the details. If you have like a third party that don't charge you anything, like a Servpro or some other water restoration, come assess the damage before filing actual claim. That'll keep your claim record clean until you really need it. Okay, thank you.
Thank you, James. Sam, I'm going to sell my rental house next month. Do I need to get a different insurance policy while it's on the market for sale?
Well, let's see here. Most of the rental house policy or homeowner policy, once you vacate the house and the house become vacant, when it's more than 30 days, sometimes some of the policies 60 days, depends on what kind of the loss, your original policy may not cover. So if I am a homeowner, so I'm going to sell my house, and then I move out, the house become vacant. Now, if some homeless live in my house when I'm not there, and then they steal something, whatever, the coverage will not be honored on that. So, of course, as a realtors, you don't have to tell them this, but you can just tell them that, well, why don't they check with their own agent to check whether their policy will still cover them if the house is in the market for 60 days or more than that. Sometimes I see cases that they had a fire, arson or whatever, more than 60 days, vandalism, things like that, and the claim is not covered. So just be careful with that, and of course you advise them to talk to their own agent, then they can find out, and it is not from you to tell them whether there's yes or no, but the agent can tell them. So however, if the house is up for sale in the market, they can actually get what they call the vacant home policy to protect them. So the vacant home policy, of course, is protecting them when the house is in the market for sales. So they do have the coverage for the property and the coverage for the liability to protect the homeowners.
Thank you, Sam.
Okay.
Mark, why is it important as a property manager for my investor to require tenants to obtain renter's insurance?
So there's a misnomer out there that the renter's policy affords no protection for the investor or the landlord, and that's not true. Yes, the main reason for the renter's insurance is for the tenant, but here's how it protects the landlord or the investors. For instance, what if the tenant themselves caused property damage to the home? They left a candle burning and unfortunately it caused $10,000-$20,000, the fire department comes out. The landlord can actually request that the renter's policy pay for that because the damage was as a result of the negligence of the renter themselves. I've also had a case where, although the rental agreement said no dogs, no pets allowed and whatnot, my landlord's tenant had a dog that bit somebody, and the attorney sued both the landlord and the tenant. And so if the tenant doesn't have any renter's insurance, then the defense is all up to the landlord, and that could cost tens of thousands of dollars, even if he can absolve himself. So that protects and gives some money on that aspect. I've also had other incidents and seen other incidents where maybe the house is beside somebody that's caused fire damage or whatnot, or there was some damage, and now the tenant can't stay in the house because it's going to take 30 days to rebuild the living room or whatever, and so the tenant's house is uninhabitable. Well, if they have tenant's insurance, and if it's a great tenant, you want to keep that tenant as a landlord, right? So what often happens is that when the tenant doesn't have insurance, the tenant will ask the landlord to put him up someplace else, and that can be a lot of money, especially if there's no housing. Then hotel costs, times 30 days is way more than the rent he receives. However, if the tenant happens to have renter's insurance will pay for them to be put someplace else while their house is being rebuilt. So that also protects, and that's how it protects the landlord.
Very good. At this time, I'd like to open it up for any questions. Just a second.
Good morning. What does the state ADU policy have, what type of impact does it have on the insurance industry, and what are each of your specific insurance agencies doing about it?
Gentlemen, anybody?
I'll answer it.
Stump them.
Waiting. I'm trying to be cordial, unlike the what you call it, debate that just happened a couple of days ago. Okay. Well, so everybody know about this new ADU thing that's come across for realtors. It's a selling point apparently. So it's catching our industry by surprise only because it's created something that wasn't meant for our policies. So basically you have a situation where a homeowner is trying to build an additional, they call it I can't even say that word. So a word, and then living dwelling units, all right? So basically additional dwelling units within the house. So they're creating they're converting a garage into a room, a living quarter where they can rent out, or they're creating, they're building, I've heard of people even building a little house in the back or whatnot. So it really depends on, and I'm going to just say generally on policies because I try to make myself educated in this area. So when it is attached to the unit, say I have a garage that's attached to my unit, some companies will let the homeowners keep their homeowner policy and then just go ahead and put an endorsement for that ADU unit to make sure that that's covered. So you have to contact your agent to get it endorsed to afford coverage to that. Most companies, what they will do is they will require the homeowner to change out the policy and put it into a different type of policy, landlord, and then for the homeowner, they ask them to add back coverage so that it's like a homeowner on their end, but then it's a landlord policies on another. If it's a detached structure, some companies will require that the ADU have a separate policy, which is a landlord type policy, and then the homeowner can keep its own policy. So there's various ways to cover it. Don't assume because, if you don't notify the agent and that happens, there could be not coverage afforded on these ADU units.
Thank you. You have a question?
Yeah, so there's two types. So when the seller is already moved and the unit is vacant, and it's obviously no personal property in there, is there an insurance policy for that? And then on the flip side, for the sellers that sell their units and there's a lease back, right? So now it's officially the buyer's unit, they've reported or whatnot. Is there any like temporary insurance policy for say that 20 days or 30 days lease back?
For that, once the house become vacant, you can get a vacant home policy. Of course, there's no personal belongings in there, but like you may have a dishwasher, you may have sometimes a refrigerator is in there, washer and dryers. I had a case up in Victorville, and the house become vacant, no personal belongings in there, but there's people at night, they actually break in and take away
Yes.
the washer and all those things. Okay, so those are buildings, so the vacant home policy will cover that. Now, on the lease back, so depends on, well, doesn't matter if it's 10 days, 20 days, or 1 month, 2 months, to protect the seller, they should get a rental policy on there. Because the lease back already, the seller become the landlord. So now sometimes people say, well, I lease them for only like less than 30 days, do I still need to buy it? Well, you need to ask yourself, if there's a loss, are you able to pay for the loss? Because the policy is different already. Become a rental policy, not a homeowner policy. You don't live there.
Bob?
What's the average cost to a tenant for that renter's policy when they bundle that with their car insurance?
It really depends. Bob, it's like saying, what's the average cost of a home here? It really depends on the specifics of the home. So how big the house is it a 1-bedroom house, is it a 5-bedroom house, is it a San Marino house? But normally, on the whole, the low points are like $15, $20 a month, and then you go up. You get that? Is this being recorded?
Yes.
I want to answer his question, but I'll answer it in a general term. No, that's okay. All right, so you asked what happens. So the definition of a vacant house is that the person hasn't stayed there for the past 30 days. So if you could get somebody to stay in the house for 30, within that 30 day, it just starts the clock, and that's how, there's one way that possibly you could get legally you could get around the coverages. So I always try to help out realtors at the cost of me getting in trouble. So this is not my company, but if you want to ask me off the record, there's our ways to legitimately do that. So basically, a vacant house is considered something that has not been inhabited for the past 30 days. Whether you want to sleep there for a day and all that, say, hey, this is the service I provide, then it starts the clock. Now, I just want to.
We're running out of time.
Okay.
Vince?
I am closer. Mark, you already answered the one cover for busting a pipe. On a rainstorm, the wind blew up the roof. That will be covered.
James, you want to answer that so I give you a chance?
Okay, yeah, so when it comes to like weather damage.
The question is rain damage, when rain-driven rain that causes damage on the house.
So things that are like slowly seeping, things that are kind of maintenance issues, they're generally not covered because it's like the upkeep, tear and wear on a car won't be covered, similar like tear and wear on a home won't be covered. But if there's a sudden gust of the wind, it blew off, a hole into the roof and water comes in, then that is covered. So.
That's one. The second one will be on earthquake, which the reason a lot of people don't have. It's about the deductible being so high. Naturally, if you have a $500,000 policy and even at 10% it's $50,000 before they can spend a penny.
So here's what I would tell you. I have this conversation a lot with my clients. The question is, in earthquake, there's super high deductibles. He asked me a question, why, on a $500,000 policy, if he has a 10% deductible, the deductible is $50,000. So just throwing it back to you guys, if you have a loan and your loan is $400,000 and it's with Richard, right? You have a first loan and then your house is damaged and whatnot, all right? Are many of you gonna be able to, if you didn't have earthquake insurance, go out and get a second loan for another $300,000 to rebuild? How many of you would easily be able to do that if you weren't borrowing it from a family member? Because a hard money lender is not even gonna give that to you. Are you guys gonna be able to come up with $50,000, even if you max out 5 credit cards? You are, and that's how you come up with that deductible. Fortunately, the Earth CEA, which is something that we all do for our clients, you could get now a 5% deductible. So now you could go all the way down to $25,000 on that earthquake coverage. It's just gonna cost you a whole lot more in premium. So remember, just like in auto insurance and in home insurance, the lower the deductible, the higher the cost. So it really depends on what you're trying to evaluate.
Thank you. We're out of time. I hate to cut people off. I know the panel will still be here after the meeting, but let's give them all a great big round of applause.